being back in the north. I spent a bit of time here quite a few years ago having a look at the project, and now seeing it in its third phase and what we can deliver through that work. But connecting genetics all the way through the supply chain will be a bit of a theme for me today. I'm based in Armidale in New South Wales, and coming up north was also good to get into some better weather. It was only 3 weeks ago I was out with my mates running in the snow in my budgie smugglers, and unfortunately there's video evidence of that. But coming back up north where the country looks good and the cattle look good, but getting under the hood of that today, you'll hear from a whole range of speakers that will work through from genetics all the way through the supply chain and think about, I've been spending a lot of time thinking about where we need to get to by 2030. And so I'll talk about that in a little bit more detail. We've just been working with the industry, and above the line there you've got the peak industry bodies that represent the different levy sectors. So for us, Cattle Australia represent grass-fed levy producers, ALPHA is the Australian Lot Feeders Association for the grain-fed levy, Goat Industry Council of Australia for goats, Sheep Producers Australia for the sheep industry represent the production sector. Then we've got the Australian Live Export Council with their service company Live Corp, and the Australian Meat Industry Council with the Australian Meat Processor Corporation. So we have 3 RDCs, Research and Development Corporations for the red meat industry, but we're the largest of the 3 by quite some way, and our remit is across the supply chain. The reason I put this up is that it's really important just to remind where the boundaries sit. Above the line is policy and advocacy, below the line marketing and R&D. So I will focus a lot on marketing and R&D, but we do policy research. So we're deeply connected with supporting industry on trade, on market access, and supporting and providing the evidence and information needed to form good policy. So we work very closely with the representative sector. But let's get into it. We're in a very strong position as an industry. The beef industry, when I look at the domestic value and the domestic market, is still our largest and most valuable market. But we're also very heavily reliant on exports, and in 2024 our export value was close to $15 billion. Now that's at point of export. And the domestic value is calculated on retail value. I've also included the live export value in there as well. Nearly just under 800,000 head of cattle are live exported. And I'll talk a little bit more about the outlook on both our box trade as well as live export. We've seen really strong growth in key markets around the world, and last year was quite unique, where we had the US was the largest market for beef, for lamb and for goat. The US are also one of our bigger competitors when it comes to the other markets that we supply. But our next big markets are Japan, China and Korea, in that order. And then we also have seen strong growth throughout Southeast Asia. Indonesia and Vietnam remain fundamentally important to the live export industry. One of the first trips that I undertook in visiting our international markets was to Indonesia as part of an importer-exporter meeting, and I was able to visit the trade, feedlots and processors in those countries to get a deeper understanding of where the live export trade is going, but also they're very large box beef markets for us as well, and growing demand in those markets is really critical to our future. The Middle East and North Africa continues to grow, and the UK is starting to come online off the back of a free trade agreement. So free trade agreements and reducing economic barriers to trade are really fundamental for driving demand for our product in all our markets. And the UK is a really good example where a deal that really unlocked opportunities, because prior to Brexit, our access to the EU was 7,200 tonnes of grass-fed beef. We accessed the high-quality grain-fed beef quota with 7 other countries. So we're quite limited in our quota volume. And there was also 20% duty on the 7,200 tonnes, and really severe out of quota duties that get applied to our product if we exceed those volumes. But with the UK coming on board, it went to 35,000 tonnes on day one with no in-quota duties. After 10 years, it goes to 110,000 tonnes, and after that, no quota, no duties. So that's a significant one. 60 million people who are long-term trading partners with us, and they value quality. And we're starting to see volumes pick up in the UK. Now, even if you're not an EU producer, that means that all of that volume going to the UK will create a pocket of demand in another market where that product used to go. So as we grow our market opportunities, we have a bigger piece of the pie and a larger global market to play in. We also saw last year the signing of a deal with the UAE that comes into force very shortly in the next couple of months. Now, whilst that takes duties from 5% to 0, so it wasn't a huge tariff, what we will see is opening up the opportunities with the other Gulf countries. And that will unlock significant opportunities within that region as well. And the EU is the next big one for us. And off the back of what we're seeing with this guy having a pretty big impact on global trade, the Europeans have come back to the table and are wanting to actively negotiate a free trade agreement with us as a priority. For the beef industry, better access into Europe, 300 million people, high average household incomes, really value quality, prepared to pay for quality. It's a big opportunity for us. But duties, and we thought, and the level of disruption that the tariffs have caused is immense. So for us, 10% duty on beef, on all sheep products, on goat going into the US, yes, it's disruptive, but we remain at the base level. We've had a free trade agreement in place with the US for over 20 years, but we have been caught up in this as well. So 10% duties, what's happening there is that we've only seen livestock prices and the value of 90CL trimmings into the US go up since the tariffs were put in place. And they're paying all of it. We have never seen, I was there in October and I was visiting with some of our importers and they were saying they have never seen a situation where there is demand for every category of beef that we produce in Australia. It's become one of our largest grain-fed beef markets. We've seen big growth in grass-fed production, but the 90CL trimmings, which is 90CL lean, goes into every McDonald's hamburger in the US. The average US consumer eats 3 hamburgers per person per week. It's 1 billion hamburgers a week. So they need our product. They've just put 50% duties on Brazilian beef. That's on top of 26% they already were paying because they don't have a quota like we do. So they're at 76%. So it makes them uncompetitive. So we can see that the demand outlook in the US is very strong. But then their cattle herd is the lowest it's been since the 60s. And it's a very slow rebuild, but there are signs that they're rebuilding, so it's not going to last forever. But then I happened to be in Japan, China and Korea the week after the tariffs were announced, and China took significant retaliatory measures against the US. I was standing in a Sam's Club, which is owned by Walmart, US-owned retailer, major retailer in Shanghai. They are now 100% Australian beef. They effectively took 150,000 tonnes of US beef out of China overnight. They had some product in storage and then that was it. But all of that product was then being quoted into Japan and Korea while we were there at half the price that they'd already taken positions on US product. So that, as soon as we see that disruption, it just moves, it doesn't change the volume of beef that's on the market, it just moves into other markets. So it still remains a very competitive marketplace. And we also heard very consistently across all the markets that I visited, the cost of living pressures are very real. So it's keeping a lid on, I guess, my excitement on the upside opportunity, but where we've seen the market go, and there's still room to move, I think, on the market still strengthening. So we're in a very strong position on demand, and I think we're going to test the waters on how much our consumers are willing to pay around the world. But when I speak to processors and feedlotters, they're making money at the moment. There's very good signs for the supply side, and I think the price signals will continue to improve. Plus the dollar is still behaving itself. It's something we need to keep an eye on, and who knows what's going to happen with the impact of US tariffs on our dollars tied to the US dollar. So this is a really interesting time. We also saw recently that the Australian government approved US product that comes from Canadian and Mexican cattle that are fed in the US but slaughtered that are fed in the US, imported live from Canada and Mexico, that can be sold as US product into Australia. Now the US have had access to Australia since 2019. and there's no product in any meaningful volumes coming in. And because we produce 3 times the amount of beef that we consume domestically, there's not really a market here, and the economics don't work. So I don't think we're going to see an economic impact on that announcement in any time soon. And you know, the global restock, the restock and the global impact on the amount of beef on the market is influenced very much by the US, but we shouldn't underestimate the size of the Brazilian herd. They've grown significantly, and I'll probably get the number wrong, but there's something like 250 million head of cattle in Brazil. Our herd's a bit under 30 million at the moment. So I mean, they have, we're fortunate they have a very large domestic market. Their government tries to limit exports when prices get too high domestically, so it's pretty tightly controlled. But small volume for them is enormous, you know, for us. So they remain a very big competitor. But our ability to supply that really strong demand outlook is pretty good. Our herd has rebuilt off the back of some really severe climatic conditions. But further south, like in South Australia, in Victoria in particular, they've been through a hell of a time. Southern New South Wales has been really tough. There's green shoots down south, and I think we're going to start to see strong demand for females going back into southern areas, particularly when they get some warm weather. They've had a bit of rain. It's still pretty patchy. But it's patchy everywhere, and everyone goes through their time, I guess. But we have seen a strengthening of the herd. But we're also seeing that our proportion of female cattle slaughter, I'll talk about that in a minute, is higher, that's showing that our herd is likely to come off the boil over the next few years. So we're processing about 8.5 million head of cattle this year, roughly. Our carcass weights continue to go up, and you can draw a line directly with the proportion of cattle on feed. The feedlot sector has expanded significantly. Our feedlot capacity is now approaching 1.7 million head. It's about 1.4, close to 1.5 million head of cattle on feed. Average days on feed is going up, and carcass weights are going up as a result. You can see there that carcass weights have dipped a little bit, but that was off the back of a larger proportion of grass-fed cattle hitting the market in 23, 24. But we'll continue to see carcass weights remaining pretty high, getting, you know, that's at 320 kilo average over the next few years. It's getting up there. We've seen domestic supermarkets lift their carcass weights as well, and we're starting to see a bit more of an optimal carcass weight for a processing efficiency. But our supermarkets are also exporting a fair bit of product because they're now balancing the demand domestically, depending on season, but also buying power of their customers, and are balancing the carcass by exporting more product than they have in the past as well. We're seeing about 35 to 40% of our production coming out of the feedlot sector, and I've heard forecasts of up to 50% of our production coming out of feedlots into the future. So it's going to remain a very important part of our industry, and you know, if you talk to any feedlotter, they have expansion plans. So I think we're going to continue to see strong demand from the feedlot sector. We're turning out about 800,000 head a quarter out of the feedlot sector. But the female cattle slaughter also remains very interesting because that dotted line across the middle is 46%. When we're below 46%, we're rebuilding. When we're above, we're in a herd decline. And you can see that our female cattle slaughter has been quite high. Yes, that's off the back of southern really tough seasonal conditions. We're also seeing that we're in areas where we've strung a few seasons together, there's a lot more older cows coming through as well. We saw southern sales a few weeks ago where cows are making over $4 a kilo live weight, and that's just off the back of tighter supply on that cow job. The processors aren't that excited about that, but the 90CL job's gone with them, like I say. So the price difference between the cow grid and younger cattle has really tightened up, which has just been fascinating. Live cattle exports. Indonesia remains really strong. We have cracked 300,000 head so far for the year into Indonesia. They are talking about a more liberal approach to import permits. We haven't seen that translate into actual lifting of permits. But they're good signals that food security, the president there is very happy with open market dynamics. We are seeing growth on box beef demand into Indonesia as well. I visited a company when I was there who alone, and it's an Australian guy, lives in Brisbane. He does 2 weeks in Brisbane, 2 weeks in Indonesia. He's built cold chain facilities in every province in Indonesia now. I was standing in one chiller that had 4,000 tonnes of beef in it. He personally imported 38,000 tonnes of beef into Indonesia last year out of a 70,000 tonne market, and he's very optimistic about where things can go on the box side as well. He's predominantly frozen, but he was saying that people were trading down categories. So just looking for more value options as well. So, you know, Indo still has a way to go on maturity-wise. I think we're going to see and remain to see very strong demand for Australian cattle being fed in Indonesia. And food security is the top priority for the current government, which is very good signs for us into Indonesia. Vietnam, again, we saw people met with importers that were stepping back into the market cautiously, very price sensitive, love our product, love our cattle, run their system very differently. They're looking for more finished, heavier cattle. They use the feedlots to run inventory for processing. They're not feeding them for as long as we see in Indonesia. Really interesting to see how Vietnam evolves as well. But we're looking for more market opportunities, particularly in Southeast Asia. We're doing a lot of work on market access and biosecurity, as well as the core work that we do on animal welfare in market. We've got a team of people. We've got a really neat project on biosecurity with a team of people working on biosecurity plans to stop the spread of foot and mouth disease and lumpy skin disease in Indonesia, vaccinating cattle in the feedlots, but also stopping the spread through people and vehicles, which is still remains a big challenge. And a lot of the feedlots over there are investing with small holders around that feedlot to vaccinate cattle in the holdings nearby. So that's a bit of a snapshot, very quick snapshot of where we sit, because that operating environment shapes where we go next in our strategic plan. So we consulted over the last 12 months to really think about what do we want 2030 to look like. When we set the previous strategic plan back in 2019, we could be pretty ambitious about what we thought 2030 would look like, but now we're on the hook for delivery. So we can remain aspirational. We need to be really ambitious where we can get to as an industry, but we need to be very practical in how we drive the investments and innovations across marketing and R&D over the next 5 years. So let me take you through what I see as the really big ticket areas that we're going to push hard on moving forward. Now, contributing to Australia's net zero ambitions remains a really important target for us. We've moved away from CN30. Achieving carbon neutrality by 2030 was always reliant on the right level of investment and the right policy settings. We recognised that it was a very ambitious goal for the industry, but I think what we have and what we found is that there weren't any national targets when CN30 was initiated. We also haven't had any additional support on investment outside of the MLA donor company and levies until now. We have a zero net emissions for agriculture CRC getting off the ground, but that allows us to move from R&D into adoption and commercialisation through the CRC, because they've lined up their livestock pillars directly with what we had in the CN30 roadmap. So we continue to invest in methane as a trait in our genetic evaluation, feed supplements that reduce methane, pasture varieties that not only sequester more carbon but deliver a positive productivity outcome, the environmental calculators and platforms to measure carbon baselining and provide evidence of sustainability moving forward through the supply chain, technology that reduces the cost of measuring carbon. So that allows us to, we've done a lot of the heavy lifting, but we can also fill some pretty significant knowledge gaps. This is a really complex area. We're taking a deeper dive on the biogenic methane cycle, understanding our true net methane position. There's a lot of work to happen on the way methane is accounted for in the National Greenhouse Gas Inventory. Our abatement activities, turning any investments we make into our business in putting, whether it's more legumes in extensive systems in Northern Australia, reducing the age of getting animals to market, those true productivity drivers that also deliver a positive environmental outcome, we need them recognised under the Emissions Reduction Fund and turn it into carbon credits so that there's a return on the investment that we make, and that's the biggest gap for us. So the big theme for me in this space is productivity-driven sustainability. We can't chase this at all costs. There has to be a return on investment, there has to be benefits, and that's what we're committed to delivering. But we're on the hook for the industry's emissions, net emissions, under the National Greenhouse Gas Inventory. So we continue to report on our true net number, but we'll also be working on those productivity measures through emissions intensity per kilo of production. That's the new measure in our strategic plan. The other area, and I've been banging on about this since I was pitching to take on this role, was delivering value-based marketing. Now that is working from consumer and customer, understanding how brand specifications will deliver on future expectations of our customers and consumers, objectively measuring quality and yield, being really outcome focused as an industry, but making sure that information goes back to the breeder, not just the last owner, so that we can breed, feed and finish animals with a market destination in mind. Now when we then start looking at, but what does it mean for each participant in the supply chain, what we have to understand is, well, what's the key problem we're trying to solve? And where is the biggest benefit that we can deliver? So I think some of the work that is happening right here at Spyglass is a significant part of that. Fertility in Northern Australia is low-hanging fruit and remains one of the biggest levers that we can pull. But then we need to optimise production within the environment that you're operating in. We also need to make sure that the price signals are there to incentivise the right type of production response. It's very difficult, I understand it's very difficult to invest if you're going to increase your costs if it's not going to deliver an increased return, because cost of production is still the #1 driver of profitability. So we want this to be deeply connected with profitability. We want the right signals to flow from the customer back to the production sector. And I'm also very, very keen to pursue what we can do in live export. I was in a very high-end retailer in Jakarta, and they had, next to their imported frozen product that they had displayed like in any high-end butcher shop, they also had product that was from Australian cattle that were processed locally. There is an opportunity for us to look at more mature supply chain options and partners from cattle that are processed in Indonesia into different market segments. Now, wet markets are going to remain the bulk and the core for a long, long time. It is the traditional way that Indonesians like to buy product, and that's not going to change. But substitution risk is really high, and the ability for us to differentiate our product in market comes from more mature supply chains. So we can unpack this for any market destination, in my view. I'll talk a little bit more. I'm going to be part of the discussion around MSA a little bit later, and we'll get under the hood around what research we've done in Northern Australia and where things can go in our eating quality program. But I'm more confident than ever we can deliver value-based marketing because we have the technology that is commercialised, ready to go in our camera technologies for quality and for yield. We're also doing a very large investment by redeveloping the NLAS database that will not only future-proof our traceability system, but significantly impacts our data capability to have that seamless transfer of information. The other one that Darryl mentioned was delivering multi-breed genetic evaluation. This is a 2030 ambition, and it's projects like Repronomics, and the equivalent in the south is the Southern Multi-Breed Project, where we're running the major breeds head-to-head to be able to develop the reference population to deliver a multi-breed genetic evaluation. This is very commercial producer focused. We've been asked for years by commercial producers how they can choose the best animals across a range of breeds to better meet their breeding objective so that we can drive productivity. And I think that will end up creating pull-through demand back at the seed stock sector for putting more selection pressure on the traits that are going to get us to where we need to go commercially faster. And so that's going to be a really interesting journey. We're very, very keen to work with breed societies as we go forward. We're not stepping in to replace breed societies in any way. There's no market failure there. And I actually think there's opportunities for breed societies to offer additional services. But there's a lot of breeders out there that aren't part of the current genetic evaluation, that don't fit within the current breed society model on the seed stock side. And I'd like to make sure our systems are totally complementary for creating pull-through demand on the genetic side, because it's been very much a push model and a lot of heavy lifting done by a lot of really smart people to get us to where we are today in our genetic evaluation. Well, there's a lot of overlay projects we can do, and Paul Williams will talk about the work that the Brahman Society have been doing with the carcass, following progeny through from this work through to the carcass outcomes. The photo on the right there is green feed units at UNE, where we've got net feed intake. We're feeding all of the southern multi-breed cattle in feedlots, and we also have the methane measure. So we've got methane projects overlaying it, which makes it a lot more cost effective. The other part is connecting with our marketing campaigns. I want to see pull-through demand, and that will also incentivise supply chains. When they can capture more value, that value gets passed back to producers. And our marketing campaigns on the beef side mightn't be as visible to you because you're not our target market. I don't think we need to preach the converted, but it is really good that you understand where the marketing dollars go, and I want our marketing team to be more available and our programs more visible to you. And every year in January I get asked about where's the ad for beef. Well, we've got some crackers, and this is just one of them that is available on social media. And there's a lot of depth to those campaigns. We've got retail and food service campaigns, social media influencers. There's a really great YouTube series, Comedians and Butchers. It's just opening up the conversation around how animals are raised, about quality, food safety, our production system, really opening up our industry to everyday consumers. We're also doing a lot of work with the community. And when we look at our marketing programs, very focused on consumer, driving consumer demand, and it's all about the product. We then are doing a lot of work, and we've coined this term social capital. Through the consultation of our strategic plan, there was a lot of comments about social licence. As soon as we start talking about social licence, it becomes very defensive. It's justifying what we do, defending our right to farm, but yet we have a very good story to tell. We operate in the most natural production environment. We care for the land, we care for the animals. It's fundamental to long-term sustainable business. So when we start talking about social capital, it became so much more proactive and productive, and getting out in front and being proud to tell our story. And we're doing that through the Red Meat Ambassador program, through the Australian Good Meat website, and working with producers to really educate and build skills and capability to connect with the community more broadly. Through social media platforms like TikTok, we did a TikTok social media masterclass at the TikTok headquarters with our Red Meat Ambassadors, and growing the network of people. There's no more authentic voice than a livestock producer. And through this program, we're really connecting consumers in the community with everything that we do. So we're going to really scale up our efforts in this space. There is a Red Meat Ambassador expression of interest out right now. If you are interested, we can connect you with that, and there might be some information in your booklet. The last part I want to talk about, this is my last slide, investing in our people. And we've done a lot of work over the years on leadership programs. We work with the Advancing Beef Leaders program here in Queensland, with Cattle Australia's leadership program, the Australian Rural Leadership Foundation, the Nuffield Scholarship, the Intercollegiate Meat Judging program. We have PhD scholarships. What we found, and we have a schools program, we have the virtual classroom where we have virtual reality goggles in classrooms doing tours of beef and sheep properties. And the education piece is a big area for us, but that's a collaboration cross-sectorally as well. It's going to need state and federal government funding, and there's a lot of work happening in that space. One of the gaps for us, wanting to come and work in agriculture with less experience than ever, how do we create that career pathway for them? The other really big one was safety. Our on-farm safety record is poor, and we have to acknowledge that. And we are being asked to invest and partner on really changing the way we approach safety. They're the really big ticket items that we will be addressing over the next 5 years.